Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is heading. This video is going to focus on the ASX 200. I'm also going to talk about some breakdowns in some other key markets, so make sure you stick around for that. I cover the S&P 500 in a separate video, and I'll leave a link for that in the description section below. And as always, this is general commentary and doesn't take your personal situation into account. All right, with that said, let's get into our first chart. So we've got the ASX 200 up on the screen. And well, this week we're really seeing the ASX 200 stabilize after last Friday's sharp fall, which saw the market really fall heavily. But look, I think despite this relatively narrow range over the last week, the ASX 200 remains vulnerable. There's nothing on this chart that is pointing to an imminent low being put in place. That's not to say the market can't bottom around here, but the path of least resistance, it very much remains to the downside. We've got a sequence of lower highs and lower lows. So you just see that all the highs have been falling, the lows have been falling as well. So sequence of lower highs and lower lows, so that's negative. And then the price is also currently below these moving averages. So we've got the 50 and the 100-day moving averages, which are trending lower. So I think we need to work on the basis that the sell cycle that has been in place for some time now remains in place. I think an interesting question is whether a double bottom could form around 6,400. So just looking at the June low and the low from earlier in this week, and it does have that potential. You could get a double bottom forming around current levels. The ASX 200, it's already tested below the June low. It's just been slightly below the June low earlier this week, and then it's rebounded. It wasn't able to sustain below there so far. But I think the real test will be what happens if we get a retest of this week's low over the next few days. I think the risk is that a retest opens the window to further selling. So that's what we need to be aware of over the next week. It's like what happens around this low point? Are we going to see a continued rally? Or does it break and then start to head lower from there? So yes, a double bottom is a possibility, but it shouldn't be our base case. I think we need to respect the prevailing downward momentum that is in place, and I think we need to stay defensive because we just can't rule out that we do see a continued sell-off down towards 6,200. Want to go over and have a quick look at the small ordinaries, and look, it's much the same story in that the sell-off over the last 2 weeks it's just caused a lot of technical damage, and it's going to take time. I think it's going to take time to repair this damage. But if you've been following the price action, and following the videos that I'm putting out and what we're talking about, you're probably already mostly in cash, and that's how I've been positioned now for quite a while, really, for much of this year. And I took on some ETF exposure during this rally during July and August. And I did that in the event that this turned into something bigger and was part of a larger recovery sequence potentially. But when the support gave way, we had support coming in on the small ords around 2,800. I was using the S&P 500 as my key reference point. As support broke, it was a case of winding those positions back. I want to be long when at the right time. I don't want to be long and hoping for a rebound. You don't want to be long during this sort of period here, hoping for a rebound. I want to be long when momentum's at my back, and that's currently not the case. At this point, I think it's a case of, I really do think it's now a case of cash being king. I will consider individual stocks with positive momentum, and I've still got some stocks like that in my portfolio, but I'm not interested in trying to pick lows in either falling stocks or falling indices. I think there's just too much risk in doing that, especially in this environment where there's just so much uncertainty. Yes, you can be the hero, but you can also get run over by the steamroller. And if getting run over by that steamroller is not an option, I'd suggest it's a case of playing it safe until we get a positive lead from the price action. And that's just not at the moment. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Really simple stuff. Just tells YouTube people are watching, people are engaging, then YouTube shows more people, and that helps me so much because it takes ages to put these things together, and it's really all about getting people to watch them. So if people are watching them, then it's worth putting in that time to help people like you to get a better gauge on where the market may be going. And also come over and visit me at Motion Trader, motiontrader.com.au, and see the sort of stuff that I'm doing there that might be able to help you. Now, I want to finish up by having a look at the European markets, and I think we'll start with the UK, because there's been some really important technical developments over the past week. So, just looking at the UK, this is the UK FTSE 100 index, and it's just broken down from this large triangular pattern, and it actually looks a lot like a large topping formation. It had started forming back here in February, and you can get a measured move out of these patterns. You measure the width of the pattern, and then you project that down from the breakdown point. And when you do that, you get a target around where this blue square is, which is currently about 8.5% below where the market closed on Thursday in the UK. Now, we can also see the moving averages have turned lower. The 50-day moving average is falling quicker than the 100-day moving average, and price is currently below the moving averages. So this is a particularly vulnerable point for the UK market. The UK stocks, I'll just put this onto an hourly chart for a moment to get a little bit more detail. Got a strong bounce when the BOE, when the Bank of England came out and announced they were going to be buying bonds to support the bond market, but then that just quickly peeled away, and we're now back testing the lows. And it's also notable that there's a lot of overhead resistance above the market. So I think we're going to need to see prices rally back above this breakdown point to even just to take on a neutral outlook. At the moment, I think it's just outright bearishness, but to get a neutral outlook would have to get back above this breakdown point around 7,150-ish. And this breakdown theme, it's really playing out across Europe. So just going and having a look at the Euro Stoxx 50 index, which is a collection of the 50 the largest stocks across Europe. And this, like we spoke about this last week. Last week I was saying, look, we've got this key support level for European stocks. And we looked at the UK market as well and hadn't broken down at that point. And now we've got the breakdown. We've got these breakdowns across Europe. And this was a key support at 3,400. It had held that support since March. And while that support was in place, there was always the possibility that this was going to be a basing pattern and the market may turn higher. But that hasn't been the case. It's broken down, so that keeps this larger sell sequence very much intact. I think the risk in Europe remains to the downside. This is definitely a market where the risk is that this market continues to peel away. Maybe this pivot by the Bank of England is going to make some sort of difference, but the way the price action is responding after looking at it for a couple of days, it suggests that it's not at this point. I think it's going to take a rally back towards 3,500 to neutralise this sell cycle. So look, that's the situation at the moment. I think it's a case. Look, it's still all about being defence. At the risk of sounding like a broken record, it's defence at the moment. I'd love to say there's great opportunities out there, There's bits and pieces. There's some stocks which are continuing to buck the trend, but they're few and far between at the moment. It's about protect your capital. Make sure you come out the other side because there will be opportunities. It's about being ready when those opportunities come to grab them and run with them. Let's leave it there for this week. Thank you for joining me. Please give me that like. Look forward to talking to you next week. Till then, bye for now.